This is TLT, which expresses the 20+ year Treasury bond. It's an ETF. And you look at it with the moving averages that we look at that comprise our strategies. And you can see here where the arrow is that we have an intermediate term downtrend. And this is the first time since 2019 that we've seen this on the long end of the curve. The question is this just mean reversion because TLT is still up 20% year to date as of the time of the recording of this note or this video? Or is this a regime change where we've had a falling rate environment since 1981? The Fed is committed and continues to suppress rates, push them as close to zero as possible, and maybe even negative. Certainly they are in Europe, not here in the US yet on the nominal basis. But that's the question, and it's one that you can't answer ahead of time, and yet you can't manage the risk of this happening in hindsight. So the best, in our estimation, the best we can do is to react to what is happening. And what is happening is that there's a downtrend in this asset class, and we are therefore reducing exposure to it. If the trend should resume as we go into December, we'll just simply add the exposure back. If it doesn't, then perhaps we'll enter in a long-term downtrend and we'll reduce exposure even more down to minimum levels. This is the benefit of having a rules-based systematic process that is predetermined in nature in terms of how you're going to respond to what is happening.